Today we're going to kick things off with some timeless wisdom from the late Charlie Munger, the famous billionaire. Hey folks, as you can see today, I am doing things on the fly. Busy family life, gotta get this video done so I can get it out to you on time. Charlie Munger once said, you gotta do it. And what was he referring to? That first $100,000. It's the most important part to the good foundation you will have in your investing journey. And in order to do it, he suggests that you should do anything, including using coupons, because it's a critical part of building your wealth. And today, I'm gonna share with you 3 things that I've incorporated in my life to help me build up to that $100,000. But before we do that, we're gonna jump right into the portfolio, look at how it's doing, buy some stocks, check out some metrics.
If you're new here, my name is Darren, and this is the Crazy Canuck Investor, where I make investing easy for beginners.
So let's jump right into things. All right, so the total portfolio right now is up to $132,197. If you remember from the last update, I'd said that the overall amount was down, especially in that cash account, but time is paying off where I'm making my contributions and things are growing, and the portfolio itself is also growing. So right now the cash account has $34,526 in it, and for the month of February we earned $124. All right, and into the kids' RESP, that's the Registered Education Savings Plan, we have $59,711. This account is performing incredibly well. We're up 11% on it, or $5,972. Now remember, in this account, we make regular contributions every 2 weeks, and that's to take advantage of those government grants. If you're not sure about those RESPs and how important they might be, I have made a video about it. You should go check it out. Moving on to the RRSP, we have $16,411 in that account. And that account is broken up into 2 parts, a US account and a Canadian account. So on the day, that account is up $70.18. Over the last week, it's down $42.16. Over the last month, it's up $477. Over the last 3 months, it's up $1,156. And all time, it's up $1,444, which equates to 9%. So that's 9% growth or unrealized growth in that account. And in the RRSP, we haven't had any dividends come in and haven't made any purchases in that account since I last posted my last portfolio update. All right, let's jump over to the tax-free savings account. That's the account that gets highlighted on this channel. It is up to $21,331, regular contributions of $500 every week, and whatever else I can scrounge up to get in there to get up to that $100,000. Over the day, we're up $65.04. Over the last week, we're up $68.01. Over the last month, we're up $62.85. So all time, this account is up $2,000.46, which equates to 10% growth. Now that's unrealized, so I won't get that money until I sell those stocks way down the road. Today we have $676.19 to trade with. So there has not been any dividends that have come into the account since my last video, so we'll see those in the next video. Now, I've seen some posts on Blossom talking about stock lending, and if you don't know what Blossom is, I have an account over on Blossom Social. You should download it, check it out. You can follow me real time over there if you're not already following me. So stock lending is, within the Wealthsimple platform, the ability for me to lend my stocks out to other people, and then in turn, I get paid. Now, it's not a lot, so over the course of the last month, which would be the month of January, I made 2 cents, a whopping 2 cents. And my portfolio is really not that big because I'm still in that accumulation phase, so I can only assume that the more stocks and the more ETFs that I purchase over time, that I'll be lending more of these out, and that amount that I'm earning, which is passive income, will continue to grow. All right, and so now I'm going to top up my account with whatever little bit of money I can find in our other accounts, so we have a little bit more to trade with. Okay, so I added $125, so now we have $801.19 to trade with. All right, so today we're buying XIC. So what is XIC? Well, simply put, you own the entire Canadian stock market at a low cost for owning the ETF. So instead of investing into one particular stock, you're going to invest into the entire stock market. meaning you're getting the average return of all of the stocks. So if one stock does incredibly well, but one's not doing great, somewhere in the middle is where you're going to see your return. So XIC, it does allow for drips. What's a drip? Basically, it means when your dividends come back into your account, in this case, XIC trades for about $34 a share. If your dividends add up to $34, that will then be reinvested and you'll be purchasing one more stock of XIC. Now, why is that good? Well, some brokers actually charge for you to make that trade. Now, I use Wealthsimple. I don't get charged for doing that. So if you don't know what Wealthsimple is, I've made some videos about it. You should go check them out to get familiar with it. But if you want to get started trading with Wealthsimple, I have a referral link and I'll have it here on the screen for you to use. If you use this referral code, you'll get $25 in your account to get you up and trading right away. The other thing that's really nice about this particular ETF is the MER. What's that? That's the management expense ratio, and it's 0.06%. It's also, as far as risk goes, if you're not super risk tolerant, then this is a great fund because it sits right in the middle. It's not super low, not super high. And remember one thing, the higher the risk, the higher the reward. The lower the risk, the lower the reward. Jumping down to the holdings, this ETF, like I said, holds the entire Canadian stock market, but of course you're investing in it in percentages to the different stocks that are within it. In this case, the top holding in this particular ETF is the Royal Bank. And you can see here that the weighting is 6%. So for every share you own, 6% of that share is going to be invested into Royal Bank. And then after that, it's TD at 4%. But as we go down the list, there's lots of other different companies that are not just financial companies in the Canadian stock market. And the ones that really stick out to me, which are doing really well in Canada, is Shopify and Canadian National Railway, Staples, also Canadian Pacific Railway. And the one that always creates some juicy conversation is Enbridge. Who's Enbridge? Enbridge is a Canadian utility company based in Calgary, Alberta. If you want to know why I don't own the specific stock of Enbridge and instead get exposure through ETFs, you should watch this video. So building on our asset allocation model that I set up in my last video, we're going to be buying XEF. So XEF is exposure to the international market. What I'm trying to do here is diversify my portfolio. And by doing so, I need to build up that part of the portfolio because right now I only have about $900 invested in it. So we're going to grow that asset allocation over time. All right, so today we're going to buy 7 shares of XEF. All right, good and done. All right, right on. All right, so now we're going to keep growing that REIT part of the portfolio. And for me, I want to keep that allocation somewhere between 10% and lower. Right now, I'm gearing around 8%, and I'm breaking that up between the ETF VRE, REI, and REIT Plaza. So today, we're buying 4 shares of Plaza REIT just to bring that asset allocation up because we're just under the allocation of 1% that I had set for it. And in addition to that, Passive had suggested that that would be how many I should buy to bring my asset allocation up. So we're just going to follow through that and buy 4 shares. And of course, we have a little bit of money left over. And as always, with that little bit extra money, I'm putting that into QQC, which is investing in the NASDAQ 100. Of late, the top 7 companies in the United States are doing strong. And the QQC, which follows the NASDAQ, is a more concentrated version of those companies. And so it's been doing very well as well. So we're making a fractional purchase of that today. All right, so I said that I was going to give you some tips that I've implemented in my life in order to help me grow to that $100,000, the hardest thing you're going to do in your investing journey. So how many of you do this in your daily routine? You get up, you jump in your car, you run off to the local coffee shop. In my case, that'll be McDonald's because I really like McDonald's coffee. You pick one up and off you go to work. Well, the sad reality is that every time you do that, you're putting strain on your car. It costs money for gas. Not only that, but the cost to purchase that coffee is significantly more than if you were to make it home. So in my routine at home, I have coffee to make at home and I have coffee to make at work. Now, tip number 2 is how many of you, like me, don't really have a ton of hair and you don't really need to go get some fancy haircut? Well, that's me. And the typical haircut can cost anywhere from $15 to $30 depending on where you live. In my case, I went out and I bought a set of shears and I do it myself. The initial investment, yes, there's some investment in the beginning, but over time that will add up when I don't need to go get my haircut every 6 to 8 weeks. And lastly is how many of you in your daily routine to go to work might go out with friends for coffee in the morning and then go out and get lunch in the afternoon. That stuff adds up over time. What I do to help build up for that 100,000, remember, it's the hardest thing that you're gonna do, is I try to make sacrifices now. So instead of going and buying that lunch, I make my lunch at home. A lot of times there's leftovers from the meal before at night, and I'm able to take that, or I'll make some stuff so that I can take it with me for lunch.
Hey everybody, thanks for watching to this point in the video. I apologize, this is definitely a mishmash, not my best product, but I really wanted to get the video out. We were busy last week and I felt it was important to get the video out on Mondays when I said I would get them out. Now, one of the things that I do on the channel is I really want to share those experiences that I've had, and there were 3 really big lessons that I learned when I first started off, and I wish I had learned them right away, and you can watch them in that video right here.